End-of-month trading is famously chaotic, but what if there are patterns hidden in all that noise?
So, can we actually find predictable patterns here? Let's check out signals before, during, and after the session.
First up, something called overnight dislocation. It's just the gap between futures and the previous day's close. Now, when that gap is positive, historically, 95% of these sessions didn't see a big plunge during the day. What's really cool is, about half the time, the market dips to test this level before bouncing right back.
This chart really shows that historical floor. See the green bars? Those are all the sessions that bounced. Okay, so what if that gap is huge, like over 40 points? Well, the day's high tends to come early.
The takeaway? On these days, the big upward move often happens right at the beginning of the session. All right, now for a really powerful intraday pattern, the first hour reversal. The name kind of gives it away. I mean, just look at that V-shaped recovery. The historical data on this one is pretty darn compelling.
Get this, 12 out of 13 times this happened, the day ended positive. That's an incredible 92% hit rate.
And check it out, this shows a really strong finish. The session's peak almost always came late in the day.
So what about clues after the close? There's this pattern called unconfirmed strength. Strong day, weak aftermarket.
Historically, after that setup, the market gave back those gains overnight. On average, a 34-point drop.
But what about the opposite? What if the end-of-month session was super weak? Does that slide just continue?
Nope. Actually, the data shows the next day usually bounces back. 80% of the time, it was flat or higher.
Okay, let's put this all together. How do we frame all these historical patterns in a way that's useful?
This table gives a great summary, but, and this is really important, these are not crystal balls, you know? You have to think of it as a historical base rate. It's about framing what's possible, not predicting the future.
And you got to remember the limitations. We're talking small sample sizes, and hey, market patterns can always change.
And that's the key. This isn't a trading system. It's about using data to prepare, not to predict.